Hello, I'm Liz Lumley of Finextra, and we're here today talking to Johan Trocme of Nordea. And we're going to talk a little bit about the Treasury in 2017, which is sort of the title of a report that Nordea recently released. So can you give us some of the main takeaways from that survey?
The key thing that we found in this survey was that there was a concern before we embarked on the project that with the turbulence that we've seen in the macroeconomic environment in the past few years would have put pressure on corporates to focus relentlessly on cost and efficiency, with less growth being available out there in the economy, that also spilling over into the Treasury function, becoming a dumbed down transaction machine rather than a strategic resource. And what we have found in the study that we carried out with the responses we've had and the discussions we've had with the large corporates in this region is that quite the opposite has happened. The Treasury is evolving, will continue to evolve into a strategic function within the large corporates organization.
So what are some of the major factors driving change in the Treasury currently?
One key factor is globalization, the international footprint of the large corporates of this region growing, particularly in the emerging markets out there in the world. And the Treasury function needs to be able to service the corporate in all financial matters in those new regions and remain efficient and have the capability to have a central overview and centralize key functions like liquidity management also in those new regions. Another factor is the capital markets worldwide, which are buoyed by an unprecedented level of monetary stimulus from the world's central banks. That means that there are certain risks building up out there in those capital markets. The Treasury needs to stay on top of what those risks are and ensure that the corporates are able to manage those risks, keep them under control. And in addition, another related phenomenon is that because of the regulations having affected the financial industry after the global financial crisis, the availability and cost of funding from different sources has changed quite significantly compared with, say, 5 years ago. And that means that the Treasury also needs to stay on top of what sources of funding are available to ensure that the large corporates have different available sources of funding, and to ensure at any given point in time when there is a funding need, the corporate is always able to tap the most attractive available source at that given point. I'm talking specifically about adding on to bank funding through capital markets funding like bonds and commercial paper.
You touched on technology a little bit. How is technology really driving some of these changes then?
What these corporates need in order to manage their resources efficiently is cash pooling capabilities, which allow them to centralize liquidity, to have control over liquidity, to see where liquidity is, and to ensure that there is no waste in the system. And given the pressures that the treasuries are under to be cost efficient, they need to have functionality that allows them to achieve all this without building up big levels of additional resource. They need to remain lean and mean. Another key technological change that we've seen very clearly in the dialogues that we've had with the corporates is on the foreign exchange side of their business. When it comes to transacting foreign exchange, today we have seen a very, very clear pattern in only the past few years that a big share of the total FX transactions that these large corporates execute are executed through online portals, instead of business being done on the FX side manually over the phone, as used to be the case if we go back a few years in time.
A big topic of conversation right at the moment is the changing relationship between the bank and the corporate treasurer. What would that relationship look like in 2017?
The fear when we embarked on the project of looking at where the corporate treasury is headed among our largest corporate customers was that the treasury function would become less strategic, would become dumbed down, and would become a pure processing or execution factory. Now, what we're seeing in this study is very much the opposite, that the treasury function is not only asked for an opinion within the large corporate about how to manage financial matters, whether they relate to risk management or funding or payment transactions, but is also increasingly being allowed to participate in deciding how these financial matters are to be managed and to be resolved. Such a treasury going forward, given that it's still under pressure to remain very cost efficient, will need strategic partners to support it in living up to that strategic responsibility. The Treasury will not have the resources to do everything itself, but in order to remain relevant to a Treasury as a bank or as a counterpart, as any counterpart, there will need to be a strategic relevance that we have the responsibility to offer the corporates.